In 2007, the UK economy was worth $3.093 trillion. In 2021, the country's GDP had only increased to $3.13 trillion. Over the same period, Germany's GDP increased from $3.745 trillion to $4.26 trillion, and the US GDP rose from $14.47 trillion to $23.32 trillion. Why has UK growth stagnated compared to other developed economies? And is this the sign of a trend that will continue to see the country drop further down the GDP league table? Prime Minister Rishi Sunak entered office in October 2022 with the promise of reviving the British economy and putting the country on the road to long-term prosperity. However, his term has been marked by upheaval as mortgage rates skyrocketed, the pound, the national currency, at historically low levels, and bond market volatility endangered the country's financial viability. For the past few decades, the UK's GDP growth rate has fluctuated midway between the higher rate of the United States and that of the lower rate of the Eurozone. Carsten Bezeski, Global Head of Macroeconomics at ING Research, mentioned that this situation is changing. Britain's recovery from the pandemic has been noticeably slow. Some evidence shows that the UK has an exceptionally dark future, even though many of its problems are similar to its peers and trading partners. In this video, we will tell you more about Britain's economic challenges. But before we begin, please remember to use the like and subscribe buttons. We will discuss important and controversial issues on this channel, and your support will really help us with the algorithm. According to the Chancellor, Jeremy Hunt, and the Office for Budget Responsibility, the UK is currently in recession. The Office for National Statistics stated that Britain's output dropped by 0.2% throughout the 3 months to September 2022. This drop contrasts with a 0.2% increase across the Eurozone, with production in France and Germany, both similar-sized economies, rising by 0.2% and 3% respectively. Over the identical period, the US economy expanded by 0.6%. We expect the UK to be the first to enter a recession and the last to pull out, mentioned Samuel Toombs, Chief UK Economist at Pantheon Macroeconomics. What exactly is the background story of the UK's poor performance? In many respects, Britain's economic challenges are similar to those already observed in the United States and across Europe due to the pandemic and the crisis in Ukraine. Increasing inflation, skyrocketing energy prices, and limited job prospects. And yet, Great Britain possesses an extra Achilles heel, one that it created. The UK economic environment was already weak due to the unpredictability as a result of Great Britain and Northern Ireland exiting the European Union. Britain transitioned from being a member of the world's largest trading club to an outsider. After the Brexit decision in 2016, the increase in foreign investment is 30% lower than the pre-referendum trend, while commerce with the EU, the country's largest commercial partner, slowed. The Office for Budget Responsibility, or OBR, a governmental organisation that conducts an impartial analysis of state finances, estimated in October 2022 that Brexit will diminish the UK's gross domestic product by 4% in the long run, a more significant burden than that of the pandemic. In line with an assessment done by the International Monetary Fund, when Russia's invasion of Ukraine in February drove energy costs soaring, UK families were projected to be affected to a greater extent than their peers in Western Europe because of inadequate housing insulation and a significant reliance on gas to warm houses. In reaction, the UK government intervened and subsidised energy prices for families and corporations through cash payments in what might be the most significant government involvement in the economy in generations. The Independent Institute for Fiscal Studies calculated that the change would cost around $108 billion over the following year. The scarring impact of the COVID-19 pandemic is at least a portion of the explanation for the recession. According to the Office of Budget Responsibility, the UK will recover to pre-pandemic economic levels by the end of 2024. Still, overall economic production in the UK will be 0.4% less than before the pandemic, according to figures from the Office for National Statistics. The Office for Budget Responsibility predicts a 2% reduction in GDP before Britain rebounds to prosperity. In comparison, the Organisation for Economic Cooperation and Development reported the US gross domestic product is 4.2% greater than before the outbreak, and the Eurozone GDP is 2.1% higher than at the end of 2019. Increasing activity in the labour market is also affecting the economy. According to the economist Marcel Alexandrovich, The UK labour market is extremely tight compared to many of its overseas peers. Fewer employees available may fuel inflation as firms raise rates to draw in and keep personnel. This issue is caused by people of working age, 16 to 64-year-olds, dropping out of the labour force and being classified as inactive. Over 400,000 people have become inactive since the pandemic, driven mainly by older workers, 50 to 64 years old, not returning to work. Whereas the UK has always had a lesser rate of inactivity than the EU average of 27.1%, this figure has grown dramatically during the outbreak to 23.1%. Several economists, notably Alexandrovich, believe the United Kingdom is creating its own unique difficulty with this measure. He explained, "It looks like it is long-term sickness rather than just some long COVID at play. There's a mounting problem with healthcare backlogs adding to the lack of flexibility in the UK labour market, on top of Brexit's impact on migration. As a result of fewer workers, unemployment is still lower than in other major economies. The latest figures for the 3 months to September 2022 from the United Kingdom indicated 3.6% unemployment, but the International Monetary Fund's October 2022 predicts that this will increase to 5% in 2024, somewhat less than the 5.4% forecast for the United States, less than expected for France, Italy and Canada, but greater than the 3.2% projected for Germany." Numerous nations are experiencing similar problems as the United Kingdom, driving the current negative global economic picture. Most countries anticipated interest rates to rise after a period of exceptionally low rates, a process known as the normalization of monetary policy. Yet, a dramatic rise in inflation, rising gas prices, and global supply chain concerns have prompted major central banks to restrict monetary policy by raising interest rates relatively quickly. These rate increases and policy tightening by central banks can cause significant financial and budgetary turmoil. This has posed difficulties for the currencies of emerging economies, in addition to strong currencies such as the yen, pound sterling, and euro, each of which has declined significantly versus the US dollar. The currency drops have increased inflationary strains, notably in the Eurozone and the United Kingdom, and impacted sovereign bond rates, putting financial stability in these nations at risk. This can be seen in these countries' near doubling of borrowing costs since August 2022. What are the repercussions for Britain? When comparing productivity growth from 2011 to 2019, the United Kingdom ranks as average. This is a metric of a worker's production per hour. It's a type of growth that doesn't cause inflation and is a core priority for regulators. According to OECD figures, the UK's productivity climbed 0.7% between 2011 and 2019. Identical to France and Germany, and better than Japan at 0.4%, but somewhat weaker than the US and Spain, which rose 0.8% and 0.9% respectively. According to Freya Beamish, chief economist at TS Lombard, a significant cause of poor productivity growth has resulted from attempting to promote growth with large investment pledges while still staying inside the stringent borrowing constraints. Beamish added that economies are multidimensional and Brexit was binary. So Remainers are overly gloomy and Brexiters were overly optimistic, and the truth is somewhere in between, she said. But policymakers lacking vision and desperate to tick boxes that they themselves have created will condemn the economy to a worse than necessary outcome. In the short run, a drop in the pound's value would render imports quite costly, hiking up living expenses and inflation for an island country that imports over 50% of its foodstuffs, gasoline and other basics. Analysts anticipate that the Bank of England will raise interest rates in response, placing it in the odd situation of attempting to push the tyres while the government accelerates the engine. While experts have contrasted the UK to a nascent economy, or as former US Treasury Secretary Larry Summers described it, a sinking market, the position of Britain as one of the world's leading economies may offer a certain degree of protection. The United Kingdom has the G7's second lowest debt to GDP ratio, and an actual financial default is regarded exceedingly improbable. Despite a new Prime Minister largely regarded as a steady hand, the new UK government confronts a difficult challenge in reviving global investor confidence in its financial stability. The United Kingdom in particular is coping with a worldwide trend, shifting the economic centre of gravity away from its economy. In less than 20 years, the UK's GDP has plummeted from being stronger than China's to around 9 times smaller. Furthermore, the pound no longer has the same significance as the US dollar, which means that financial markets will penalise it harshly if it deviates from the norm. The the United Kingdom is not just the only global superpower decreasing in the 3 months to September 2022. It also happens to be the only country to have not fully restored from the pandemic. Looking down the road, the Bank of England and many others believe that this is just the beginning of consecutive quarters that will signal the onset of an extended crisis. Thinking backwards, it is highly worrying that the UK economy has not progressed significantly since 2007, right before the 2008 banking collapse. What do you think will happen to the UK economy? Leave a comment to let us know. And as you're still here, why don't you check out one of our other videos on the global economy?